This is the last question for the partnership. As we go through the question first. Chan and Fong are in partnership sharing profit and loss in the ratio 2:1. Chan get 2, Fong get 1. Interest is allowed on the capital at the rate of 5% per annum and is charged on the drawing at 5%. So interest on capital 5%, interest on drawing also 5%. Fong receive a salary 10,000 per annum. The following balance were extract from the book. So this is all the detail. So you must familiar with the category of the asset, of the item of the account in the trial balance so that you can differentiate whether it should put under income statement or statement of financial position. So we go through the additional information first before we go to prepare the income statement. Okay, number 1, inventory at 30th April 2014. So this is a closing inventory, which is that you need to put under the cost of sales and also the statement of financial position. Statement of financial position is under the current asset. So there's item that you need to take notes. Number 2, the motor vehicle expenses are to be apportioned 1/4 to collect goods for the resales and 3/4 to the delivery of the goods to the customer. So this one, motor vehicle expenses. The total amount from the trial balance. Motor vehicle expenses 13,600. 13,600. Okay. 1/4. 1/4 means 1/4 is for the, let's calculate, see how much of it. 13600 divided by 4, which is 3,004. This 3,004 is for the under the carriage inward, which is under the cost of sales section. Another 3/4, which is the 3/4. So we have to take 13600 times 3/4. Then we get 13600 divided by 4 times 3. So we get 10,000. Okay. 10,200. This is the go to the customer. This is we call carriage outward. Carriage outward is under the expenses in the income statement. So this is the information they're trying to give you, that asks you to prepare the, because they say that apportioned to collect the goods for resales. This is indicate is a carriage inward. Okay. Delivery goods to the customer, carriage outward. So differentiate, then we get the amount. Now, next is that number 3. At 30th April 2014, heat and light were accrued. End of the year, expenses. Okay, both are expenses. Expenses end of year. If the amount is accrued, we have to add into the trial balance amount. If the amount is end of the year is prepaid, expenses prepaid, we have to minus from trial balance. So for the number 1, heat and light. Heat and light. Heat and light is accrued. So how much to be recognized under the income statement for the expenses? Is we take heat and light 4750. This one amount 4750 plus 750. So this is the amount that we get. So let's calculate 4750 plus 750. So the amount is total to be recognized in the, this is the amount in the expenses, total expenses. Okay. And the additional information that we are calculating. So this amount 750 will be appear in the current liability. Okay, take notes for it. So the amount for the other payable, because the new term for the accrued is other payable, which is under current liability under the statement of financial position, current liability. So this amount you need to recognize later on when we prepare statement of financial position. For the number 2, office expenses. Office expenses is a prepaid. So how much this amount is also under the income statement, under the expenses category. How much that we need to recognize? So office expenses. Okay. Here, office expenses is 36,500. But there is a prepaid here. Here is a prepaid. So minus 4,000. So we get the amount. So let's calculate 36500 minus 400. So this one is 32,500. So this prepaid, take it out, deduct, and to recognize, and come to the the prepaid amount for the office expenses. We call other receivable. This amount we need to recognize in the current asset. So 4,000 need to recognize as a current asset. Next, number 4. Half of the phone 10,000 salary have been paid to him and posted to the wages and the salary account. It means that this account is wrongly recognized in the book. So we have to make adjustment, debit current account, okay, and credit wages and salary. Take note that partner salary will be recognized in the current account and it will not charge into the expenses. Okay, so now here we will debit, because this is a payment amount. Payment amount only pay half, so we pay half will be 10,000 divided by 2, which is 5,000 that we need to adjust from the wages and salary. So wages and salary in the income statement for the expenses from the book. Where is the wages and, let's see, where's the wages and salary? Okay, wages and salary, which is in here, 80,000. So we have to take 80,000 minus 5,000, and then we get 75,000. So this is to be recognized. Next is that 6, depreciation. Okay, sorry, number 5. Okay. Number 5, feature and fitting cost 2,000, purchased by check. The moment by check, that means it's the bank account, and posted to on the 20th April has not been recorded. That means this is an omission, error of omission, error of omission. So debit feature and fitting. Feature and fitting is a non-current asset, and credit. Okay. So this amount 2,000. So this will affect the calculation for the depreciation. So you take notes later on when we calculate depreciation, we have to take notes about it. So number 6, depreciation to be charged on the all non-current asset owned at the end of the year. So this is talking about the depreciation. Number 1, they say that motor vehicle at the rate of 25% per annum using reducing balance method. Reducing balance method, the formula is cost minus provision for depreciation and then times the percentage. Or also can be net book value times the percentage. So now we calculate the amount. So what's the cost for the motor vehicle? Okay, motor vehicle, here motor vehicle cost is 45,000. 45,000. And the provision for motor vehicle depreciation is 25,000. So we take this amount, then book value amount, times the percentage. The percentage given is 25%. So now we calculate. 1500 minus 2500 times the 25%. So this is a 5,000. Okay. Next is at number 2. Feature and fitting. Feature and fitting is, they say that straight line method. Straight line method is taking the cost times the percentage. Okay, this is normally in the question, but sometime in the question they give you the scrap value. So the formula also can be the cost minus residue value or disposal value, and then times the percentage or divide by the number of working life. So here is a quite straightforward, but take note that number 5 information, the 2,000 affecting the calculation. So our cost actually is how much? Our cost for the fixture is 28,000. Okay, 28,000. But we have 2,000 omitted, which is number 5 information, times the percentage, 10%. So which we get 30,000 times 10, which is the 3,000. So this is the amount that we have. Okay, the last one, 7. Trade receivable contain a debt 7,500, which is considered irrecoverable. So irrecoverable debt 7,500. This one later on in your income statement, you will need to recognize as expenses. Okay, provision for doubtful debt to be maintained at 6%. So the provision for doubtful debt, we are calculating the balance carried out for the current asset under the statement of financial position. So what is the formula? Since this one got the irrecoverable debt, we have to take trade receivable minus irrecoverable debt. This irrecoverable debt is in the additional information, which is number 7 given, and times the percentage. So now we calculate. Okay, the trade receivable amount is 55,000. And then our irrecoverable debt is 7,500. Then times the percentage, 6%. So we times 6%, we get the amount for, let's see, 55,000 minus 7,500 times the 6%. So we get 2,000. Okay, 2,850. So this is the amount. So this amount will appear in the current asset. Okay, deduct from trade receivable. So take notes for it. Okay. But how much that we should recognize under the income statement? So we need to see the opening balance for the provision for doubtful debt. Is there any provision for doubtful debt in here? Provision for doubtful debt, which is the amount equal to 2001. So this 2001 is a balance breakdown. So end year, so the balance breakdown is in the 2001. In where we get it in the trial balance that we see. So to find the amount to be recognized in the income statement, we have to calculate increase in the provision for doubtful debt, which is 2850 minus 2100, which is the amount is 750. So this is the amount that we should recognize. This is the amount we recognize in the income statement as expenses. So take notes, because always get confused about this, most of the students. Okay, now all the adjustment we have done, but in the exam, you must try to do as fast as possible. So all this adjustment in the additional information, for example here, you must try to put in something, like example, try to make yourself memorize, oh, this is under cost of sales and the current asset. So you write something beside the information, so it will be faster for you. Whereas for this type of question, like 750 was accrued. So how are you going to make it in the exam? So you go to the heat and light. Okay. This heat and light, beside you put 750. So that is how you try to make, how to do it faster. So that at least you know that this amount had to add plus in order to get a total for the income statement for the expenses. Okay, now we go and prepare the income statement, because the question asked to prepare the income statement and appropriation account. So I give the format first, start with the revenue section, and then less cost of sales, okay, and then we have gross profit, and then if you have any income, so we add other income, and then less expenses. This is a general idea about how to prepare the income statement. Then after that, we should new format, profit from operation. Okay, then if you have any finance cost, so finance cost, you have to minus from the profit from operation. Then after that, only the last profit for the year. So take notes about the change of the syllabus. Okay, now we see what are the revenue. So this is a revenue. We have 480,500. Is there any sales return? So here you saw the return from the customer, which is this is indicate this is a sales return. So we have to minus. So if you can put bracket, you put bracket. You cannot, then you take notes that this amount you have to minus. This is a sales return. Okay. And the amount is, take this amount minus this. So this is the what we have. Now next is that we need to prepare the cost of sales. Cost of sales, what is the information? Opening inventory at 1st May 2013. Where we get it? Here. This is information from here. 47700, and then plus the purchases, the standard item in the question. So here, since I got 3 columns, then we just put in the purchases is 20900. So this is the purchases, and just now we calculated there is the carriage inward here. This carriage inward we had to put into it. So here, carriage inward. Carriage inward have to plus, carriage inward. Okay, the amount is 3,004. Okay, and in here you saw there is a return to supplier. So this return to supplier have to minus from the purchases. We call purchases returns. So this amount had to minus and 10,500. So we plus and minus the amount. Okay, plus minus. Okay, we get this total first since I got the group. The next item that we got to see, sometimes we have to check whether got any information. And this closing inventory have to put in minus inventory at 30th April 2014. If you don't want to put minus plus, then can, but take notes, you must take how to calculate on it, just in case you don't want to put minus or plus. So take this amount minus closing inventory, we get cost of sales. The cost of sales is 211,250. So now we take the net sales minus the cost of sales. So this is a cost of sales, this is a gross profit. So take note that gross profit must put in the indicate gross profit. So from this one, is there any other income? So let's double check. Okay, don't have other income. So what we got to do? We just move this one up. Okay, so this is the header. Don't write anything. Now list out from here. Start from the top to the bottom. We see one by one. Which one is considered the expenses? This one is as the provision for depreciation as non-current asset. That means we have depreciation. So just now we already calculate that there are two depreciation we calculate. One is a depreciation for the motor vehicle. Another one is the feature and fitting. So for all this working, try to show the detail how you get the number. Okay, now let's move on. This amount, let's we put in. Okay, let's see, go to the information. Okay, this one we have to take in and show it. This is how we get the number. Okay, so 5,000. Okay, whereas this one, same thing. Okay, we have these two amount plus we are. So this is the amount. So how much we calculated just now? 3,000. Show the working beside your detail. Now next is that office. Okay, office expenses, motor vehicle expenses, selling expenses, heat, wages and salary, and then heat and light, bank loan interest, new syllabus, bank loan interest should put into here. Okay, so here we change into the bank loan interest. Okay, what else the item that we have? Here, provision for doubtful debt. Just now we have the irrecoverable debt, irrecoverable debt. Okay, next is an increase in the provision for doubtful debt. This one, increase in the provision for doubtful debt. Try to show all your working how you get the number. Okay, so here is 2850 minus 2100. Okay, and then this one irrecoverable debt based on the information is 7,500. And heat and light. Heat and light just now got the adjustment. Okay, this is a heat and light adjustment. So we put in the amount. Heat and light. For 750 plus 750. And our wages also just now got the adjustment. So whatever you take right on beside your this all the working will help you to memorize it. So this one we have to minus 5,000 for the wages. Okay, this one is 75,000. And selling expenses, they didn't mention any change. So it means that they should not have any change for the selling expenses. So we just take in the amount 3800. Okay, now next, motor vehicle expenses. Just now we got to do the adjustment, which is the calculation about the carriage outward. This is a carriage outward that we should recognize. So we have to take this amount, show beside the detail. So try to show all your working beside your detail. So because sometimes they give you 2 marks for the working. Now 13600 times 3/4. Okay, office expenses. Office expenses. Okay, here office expenses also got the adjustment, got a prepaid. So we have to minus office expenses. So 36500 minus 4,000. So this is all the expenses that we have recognized. So we put in the amount first. Okay, this is a subtotal for the expenses. Okay, since that still got space, we move this one up. Okay. Take the gross profit minus the expenses. And one more item to be recognized is the bank loan interest. In the question here, they say bank loan interest paid. Take note that when we recognize the income statement, we take what's supposed to be paid, which is the 8% of the 200,000, not the paid amount. Is the percentage, the principal take 200 times 8%. So we get the answer 200,000 times 8%. 8%. So this is the 16,000 that we should recognize as a expenses for the interest, loan interest. Then after that, take this amount minus this. So we get 71,000. Okay, this is a profit for the year. And the question, because they combine the appropriation account. So since they combine appropriation account, I will just prepare the standard first. Add interest. This is like a formula. Please memorize it. Interest on drawing. Who is the partner in this question? This partner is Chan and Fong. Whereas after that, you minus less interest This is like a formula, interest on capital. Also put Chan and Fong. Okay, so next is that, is there any salary? If yes, then we have to minus less salary. So partner salary, you don't, later we see who is the one get partner salary. So this is all the standard item normally in the exam they will give. So let's see what is the information about the interest on drawing. So interest on drawing is 5%. How much the drawing taken? Chan taking 6,000. So we take 6,000 times 5%. Whereas Fong take 10,000 times 5%. So calculate the amount first. 6,000 times 5%. And then 10,000 times 5%. So we get 800. So add these two amounts. Okay, take this plus add, because this is an income to partnership, okay, which is the expenses to the partner. Whereas these two, interest on capital. How much the capital? Capital Chan is 60,000. And we also know that this is also 5%. So here will be, Fong is 40,000 times 5%. So we calculate the amount first. So in the exam, try to highlight the key information so that you won't miss out anything. So this total add up. Another one, salary. See from the top, they say that Fong received a salary 10,000. So this 10,000 is for Fong only, 10,000. Have to minus. So we take this amount minus these two. So we get the profit share. These two amount is the expenses to the partnership. Now, share of profit, the format, try to memorize it. So for the Chan, okay, Chan, how much did Chan get? Chan should be, let's see, 2. Chan will get 2, so 2 over 3, the formula, okay, using the fraction. Then Fong is 57,000 times 1 over 3. So this is the answer that we get. So now we calculate this divided by 3 times 2 times 2. So without this one divided by 3. So this is a total amount share among the partner for the share of the profit. So consider that for the income statement and appropriation account. So the next, they asked to prepare the current account. So current account is, we need to see opening balance, whether in the debit side or credit side or not. So go to the current account, both also credit side, 1,500 and 4,000, sorry. So we put 1,500 and 4,000. And this question, no need to put the date. So we ignore the date because they didn't give the date column. Okay, so just put balance what down? 1,500. Okay, the item that we can tackle from here, what to be the debit, what to be credit, also the standard format. So in here, our appropriation account will help us. Interest on drawing will be in the debit side. Okay, in the debit side. So the amount will be, because this is the expenses to the partner, reduce the partner amount, partner current account amount. Next is that interest on capital. Interest on capital is expenses to the partnership, but it's an income to the partner. So we put into the credit side, interest on capital. So how much of it? 3,000 and 2,000. Okay. Next is that there is a salary which given to the firm. Okay. Firm get the salary here, 10,000. Next is that one more item. We have the share of profit. Share of profit. So take notes about this format of debit side or credit side item. So share of profit, 38,000. And then 19,000. So these two amounts done. Don't forget when you have interest on drawing account must put into here. For the partnership, drawing is under the current account. Keep under the current. Where we get it, the information from the trial balance. You saw the drawing 6,000 and 10,000. So 6,000, 10,000. So this is the information that we have. Now next is that we got to take notes that in the additional information they did mention about. So that is important to write somewhere in the question, in the information. They say that half of the firm's 10,000 salary has been paid. So how much have been paid? We paid 5,000 already. Okay, this information telling us that we already paid. So we have to debit current account 5,000. Here you put bank salary paid. So this is a salary paid for the firm, 5,000. Okay, next is that what else the information that we have? Okay, I think that's all for the information that we needed. Okay, now we start to calculate debit and credit side. See which one is more, which one is less. Okay, let's continue first. Subtotal. Here's subtotal. Subtotal. And here, balance carried out. Because credit more than the debit. So minus these two. And then for 35 minus. So this is the amount balance carried out. So balance carried out, balance put down must be complete. Okay, debit credit concept. Okay, we done for the current account. The next is they asked to prepare the statement of financial position. So statement of financial position, I move into here because it's easier to see side by side. Okay, I will introduce the section first. Non-current asset. This is all the section that you need to take notes. What is the debt? What is the asset? What is the non-current asset? What is the current asset? Okay, our non-current asset must have the 3 columns because you have all the information. Cost, accumulated, depreciation, and then net book value. This is only, this 3 column is only for non-current asset. Which one is our non-current asset? Which we prepare the depreciation. So here we have land and building. Okay, land and building. And then after that, motor vehicle. And then after that, feature and fitting. And don't forget that always take notes to whenever have the adjustment, be careful because feature got the adjustment. Okay, this is for the land and building. Motor vehicle cost no change. Okay, motor vehicle cost is 45,000. But for the feature and fitting, remember here got 2008, and then the additional information, the omission, the error of omission 2000. So this all need to take notes to avoid the error. For this one, they didn't say depreciation because from the beginning year, you didn't see land and building got the depreciation. So we don't need to put in depreciation amount. So net book value will be equal to the cost. But for the motor vehicle, accumulated depreciation is you have to take the opening plus the current year. This amount is taking opening balance, which is normally in the trial balance in the question, plus the current year. Where you get your current year? From your income statement. So that is the thing that you need to take notes. Okay, now here, how much is our opening? Motor vehicle, 25,000. And how much our current year? Depreciation, motor vehicle, 5,000. So we plus together, so we get 30,000. So next is that for the feature and fitting is 12,000. Current year is 3,000. So total 15,000. So we take the cost minus accumulated depreciation, we get the subtotal for the net amount for the asset. Subtotal individual column. And you notice I only underline until here because here I still need to continue my calculation later. Okay, so this is the information we done for the non-current asset. For the current asset, so all this format, try to memorize so that you get used to it. The format is rigid, is not changed. Normally in current asset, what is the item normally current asset that we have? Inventory. Inventory refer to the closing inventory. Trade receivable. And this trade receivable, this question got the provision. So we minus provision for doubtful debt. Other than that, we have the prepaid just now. Other receivable, which is this amount is the item for other receivable refer to the office expenses. This is your prepaid expenses. Okay. Now next is we have the bank. Let's see. The bank is an asset or liability. Bank is the debit, that means it's an asset. Bank. Okay. So let's put in the amount first. Inventory in the additional information. This one, closing inventory, 38,350. For the trade receivable, take notes that because there is a change, the irrecoverable debt in here, 7,000. So you have to take the original amounts, 55,000 in the trial balance minus 7,005. So this is the new amount for the trade receivable. So we take 5500 minus 7500. So for the provision for doubtful debt, in the additional information, we actually will recalculate this amount. This is the amount 2850. If you don't want, then you also can take this amount times the percentage. So the percentage given in the question is 6%. So we times 6%. So we get the 2850 also. And then after that, only we minus. Okay, to get the net amount into here. Other receivable. On this question, other receivable only one, which is the prepaid for the office expenses, 4,000. And next is that for the bank. Okay, our bank amount in the trial balance is 34500. And don't forget in the additional information number 4, this and number 5. They say that the omission, this one credit bank means we have to minus 2,000. All this working, try to show beside your detail. This is all the working. We get 32,500. So now we add the subtotal. Okay. Take this minus this. So we get 1,6. Okay, 165. Okay, this is our total asset. Now, capital section. Our capital section got two partners. One is a Chan, one is a Fong. So this is the old format because they given us the current account. They asked us to prepare current account. So we use the old format to prepare it. So our capital account for the Chan is 60,000 and Fong is 40,000. So this total add up, you get 100. And then another one, current account. Current account and capital account are both in the same section. Chan, Fong. So because we already calculate the current account, so we just need to take the amount, the current account amount, this amount for Chan, and then for Fong is 19. So these two amount added up. So add this section because this is under the capital section actually. So subtotal first. Okay, this is the total capital for the Chan and Fong. Now next is that non-current. This question got non-current liability, which is the loan. Here, the 8%. Okay, so this 8% loan repayable, this is more than 1 year. So this is a non-current liability. So you can put in 8% loan, 200,000. Because it's only one item, straight away put into last column. The next one is the current liability. Okay, current liability, standard item, we have trade payable, other payable. So the trade payable, what are the trade payable that we have here? 36,050. But for the other payable is a accrued amount. Accrued amount is a hit and light, which is this one, 750. But don't forget there is one more item that we need to calculate. You notice that the bank loan interest paid. Where is the bank loans interest paid? Okay, this bank loans interest pay is 9,000. We only pay for 9,000. But in our income statement, we calculated is the 16,000. 16,000 compared to the 9,000 paid. We have still balance 7,000 unpaid. The 7,000 unpaid, these two amount, the different 7,000 is considered other payable, which is the loan interest accrued. So we have to plus 7,000 to get the total other payable amount. So this one is 7,750. Okay, add the two amount. So we get, where is my mistake? Let me see. Sorry, I add wrongly. Okay, this amount and this amount is tally. Okay, so once it's tally, that means the account should be correct. Okay, that's all for the partnership topic that I'm sharing with you.